Welcome to today's webinar. On behalf of the National Transit Institute, I welcome you and thank you all for participating. The National Transit Institute develops, promotes, and delivers training and education programs for the public transit industry in the United States. Today's webinar is NTD reporting for state DOT's report year 2021. We are very pleased to have as our presenters today, Bailey Krause and Eric Chadwell. Bailey Krause joined the NTD team in 2014. She is a graduate of Michigan State University and currently serves as the lead analyst for rural transportation programs for the National Transit Database. Eric Chadwell joined the NTD team in 2016. He is a graduate of James Madison University and currently serves as a senior analyst supporting data validation and analysis for the NTD. For today's presentation, we ask that instead of putting any questions you may have into the chat box, you use the dedicated Q&A box. The Q&A box should show up as an option on your toolbar. It looks like the chat box, so I see why that could get confusing, but if we use the Q&A box, we can keep a record of it in case anyone wants a copy of that later. You can also use the chat box, as I just mentioned. You can message me or the presenters or each other, and as soon as we get started, I will be placing a link to the handouts, a copy of today's presentation, in the chat box so that you can download that if you have not already done so. I think that's it for my housekeeping, and I am now going to turn the presentation over to Bailey and Eric.
All right, thank you, Lori. So welcome everyone. Thank you for joining us today. Hearing my voice again for the 8th year running, I feel. So we're going to go ahead and get through this presentation. If you do have any questions, like Lori said, please utilize that the Q&A pod. So let's go ahead and get started. As a disclaimer, the contents of this presentation is intended to provide clarity regarding the existing requirements of the FTA and NTD. Please always feel free to refer to the statutes and regulations for the requirements. Right, so the goal of this webinar is to identify changes for the upcoming report year and to provide an overview of NTD reporting requirements and how those requirements do go into the system itself. And again, this is designed for state DOT reporters. We will touch on different items within like rural general public transit subrecipients and so forth, but this is really geared towards those state DOT stakeholders. So here's the agenda for the afternoon. First, we're going to do a quick overview of the NTD. Then we're going to move on to important changes and clarifications for the 2021 report year. Next, we'll review some fundamentals of NTD reporting. We'll discuss how to get started in the NTD 2.0 or 3.0, however you view it, reporting system. Then move on to how to kick off and complete the annual report, which will include some of the common reporting challenges that we've seen. And then lastly, we'll go ahead and review how to submit your report in the closeout and validation process. So we're trying to fit a lot into this, about an hour and a half, so we're just going to buckle up and get on into it. Here's the contact information for the NTD. If at any point you do require technical assistance while completing your report or accessing our published data products, please feel free to either call or email your analyst directly or help desk line between 8 and 7 p.m. Eastern. Anything after 5 p.m., your best bet will probably be to contact the help desk as the analysts may or may not be there past 5 p.m. depending on the schedule that week. Again, my name is Bailey Krause, and I am joined here by Eric, who will also be presenting in a little bit. Our contact information is listed here if you do have any questions about the presentation, or you can also contact your assigned analyst. I mean, most of you probably heard us throughout the time, so you have our information. In addition to our contact information, we also wanted to provide FTA program contacts here, as in Thomas Coleman and Mishadoni Smith. So if we ever hear us refer to Tom and Mish, this is who we are talking about. All right, the key reference documents are located mostly here, and this will include the policy manual, which should be published very soon, the glossary user guide, and the COVID-19 guide. Some of these, the COVID-19 guide was updated last year mostly. This year, it's kind of the same thing. There's not too many changes. A couple clarifications, which we'll go over in a moment. So first we're going to do a quick overview of the NTD. So what is the NTD, or National Transit Database? NTD was established to be the nation's primary source for information and statistics on all public transit modes in the US. It's a source of data for performance measurement, benchmarking, as well as research. So really, if you're receiving the Chapter 53 funds, this is where you're going to be reporting at some point in your grant process. So again, who reports? Gave it away. Chapter 53 funded recipients, subrecipients, etc. These may be 5310, 5307, 5311, any of the 5339s for the assets. So it just kind of depends on what you're doing. Who's reporting are those previous subrecipients of 5311 funds if they do have continuing grant requirements. And what I'm talking about that is if they have assets that are within their the life of the grant itself. So they may not be receiving operating 5311, but if they do have that 5311 funded asset, they may still need to report. And then, of course, we're looking at the future subrecipients too. So if they're planning on receiving or they want to receive it in the future, and they're trying to get in either for apportionment in a tribal sense, or if, you know, as a state grant maker, you're trying to get them in and used to the requirements of the 5311 program once they do receive it. So the 5311 subrecipients and recipients are required to report to the NTD due to the grant requirements as stated here from legislation. I'm sure you've all seen this before. All right, so what is this data that is being reported to us used for? Well, formula apportionments first and foremost. Performance benchmarking, research and statistics program. We do get a lot of emails from different programs and different researchers using it for, you know, statistics and running models. So pretty interesting stuff. And of course for congressional reports as well. All right, the deadline. So the deadline is upcoming for our June 30th fiscal year end dates, October 31st. So that's, you know, what we're looking at right now. If you do have a later, so we're looking at January 31st and April 30th. That's just the due date. All right, so now we're going to go into the changes and clarifications for report year 2021 that may affect your report. First, I want to discuss the federal apportionment for FY 2022 and FY 2023 and COVID-19. So for the fiscal year 2022, which is the most recent year you just completed as in report year 2020, I know there's a lot of years I'm talking about, FTA will use either the data from 2020 or 2019, whichever is higher, and that's going to be at a subrecipient level. For 2023, FTA will apply the same procedure automatically, either using the 2021 data or the 2019 data based on the higher VRM. So this is going to be going on in the background, just like it was this last year. All right, so next year, so we're talking about, you know, going forward. In the summer of 2022, FTA does plan to release a task that will list your rural general public transit subrecipients, or RGPTs, and you will have to advise which of your RGPT subrecipients are affected by census updates. It will be a yes or no selection, and if yes, there will be additional information to fill out. And then, I know this is a little vague right now, but more training and information will come out in the spring of 2022 once we have a better outlook as to when all this will take place. So if you're thinking back, this is what happened in 2011, going into the year in 2012. Okay, so the next thing that is, it's new. By now, you've probably received some information from FACE's team about Login.gov. Starting in the next couple weeks, all users will be required to use the Login.gov authentication instead of the login you've been using in the past. With that being said, you'll need to set up at least one secondary authentication method to log in. When I mention a secondary authentication method, there are a couple different options, such as a security key, an authentication application like Authy, or having your phone be a backup. If you receive, you know, text, it can't be a VoIP phone, so it'd have to be a different kind. But there are some options here. And of course, if you do need assistance with setting up that login.gov information, please contact the FTA IT help desk at dot.gov. Again, FTA IT Help Desk at dot.gov. All right, so for reporting for this year specifically now, what we're looking at is going into the final year of the TAM cycle, really. So that's kind of a big thing. It's been, since report year 2018. So for this year, the 100% targets, the 100% of your condition assessments need to be completed for RY 2021. If you are unable to, or if any of your subrecipients are unable to complete this due to various reasons in the last year or two, please request a data waiver for any of them that you cannot have it completed for. And in that waiver, you will list all the facilities that are not yet assessed, and then the percent of the total that has not been assessed. So this will be something you'll probably do after you're right around your first submission. You'll have a better understanding of who has what. And of course, if you don't quite know if there's any missing, just feel free to contact your analyst and we can assist you with that. All right, so a change that you may have seen towards the end of last year was updates to your P10 for your subrecipients and the addresses. So on the P10, the address should be reported, should be the physical address, not the mailing address. If there are any disagreements between the physical and the mailing address, please update it to the physical address. So what happened is we went through, or FTA and FACES went through and has a sam.gov feature. So now you can actually upload your address based on the DUNS number of the agency, if the agency has a DUNS number. When you're adding a new subrecipient, I'll mention a little bit that you can add their DUNS number and it will populate the address for you. So that's just a new update to kind of merge everything together so you're not duplicating work. Okay, so last year, COVID funding was rolled out. So CARES, CRISA, and ARPA funding was rolled out throughout the year. These funds are now available on the RR20 fund. On the RR20 form. So if you do report any of these on behalf of your subrecipients, just make sure to break them out as applicable, and then that they are reported under the 5311 funding line, because there will be, tribal transit of these types of funds, 5307, which you shouldn't see on the form itself, and of course 5311. So, just when you're going through, make sure, do a double check. Okay, so this is just a quick clarification about limited shared ride services. So if your subrecipients have temporarily suspended shared ride during the ongoing pandemic, it's still reportable. However, this is only if it's temporary, because it still needs to meet the other public transit requirements. If the service has been fully suspended, just please make sure to add any details about the suspension, about how long it lasted, or if it was certain parts of the service was suspended. That way, when we're going through validation, it will just be a lot easier. We don't have to go back and forth as much. And I'm sure Eric probably will mention that later too. All right, another clarification that's come up over the past year is how to report data from Florida vehicles. So Florida vehicles are not boats in this instance, but they're those that are on standby and at key locations and would respond to problems related to passenger overflow or breakdowns. The data is reportable if the vehicle is dispatched. However, if the vehicle just kind of stays at that key point and doesn't move, the data is not reportable. It's just, it's not reportable for rural whatsoever. Okay. We have had a couple of questions come up throughout the year about meal delivery services and whether or not the service provided under delivery is reportable. If the meal delivery does not include active transport of passengers, the service data is not reported. If you are using 5311 funding for the meal delivery, the funding would be reported on the RR20, not the service, but the amount of funding spent on that service would not be reported on the mode's expenses. So when you're looking at the RR20 form, that would mean that the top mode expenses, like the DR expenses, would not match the funding that is being put towards the DR mode. So you would have a check fired that pretty much states that this doesn't match. Please explain why, and you'd say, meal delivery services that were funded by 5311 not reported on my demand response mode. And your analysts will pick up on that pretty quickly. All right, a reminder for your 2021 report year, emergency services are not considered public transit and should not be reported to NTD. If you have any other non-passenger service, again, like meal delivery, those services are not reportable either. So if you do have like very specific questions about this, just feel free to reach out to your analyst. If your analyst doesn't know, they'll ask me. If I am that analyst, I will ask too. So just, if you do have any of these really small, like, everyone's a little different in the transportation role, so we understand. So just ask questions as needed. We're here for you. All right, so change the clarifications, all set. Not a whole lot this year. That's, we're just kind of moving along with that. So let's see here. We're going to jump into fundamentals. So we're going to cover modes, types of services, revenue definitions, and overview of financial information. When reporting to the NTD, the service must be public. So that's first and foremost. Once that's determined, the mode comes next. Here on the slide are the most common modes in the rural module: demand response and bus. So bus service is powered by a motor and fuel contained within the vehicle. It does include those that have route deviation, point deviation, or deviated fixed route. All those three are bus. They are not demand response. Route deviation, especially, we get questions about endpoint deviation. So, just let us know if you have questions about this, because we'd rather get it reported right the first time around. And then, of course, demand response service is defined as service scheduled in response to calls from passengers, like a dial-a-ride. So it does not have any of those route stops that are scheduled. All right, another popular mode within the rural module that we have further clarified over the years is the commuter bus mode. So we do get questions on what is considered commuter bus versus regular bus. So to clarify, commuter bus operates with more than 5 miles of closed door service, and the same type of vehicles are consistently operated on this service. So if you think you have both bus and commuter bus service, please keep in mind that vehicles should not be used between the services on the same day. And this also applies to the driver's work assignments, which are typically separate. So different buses, different drivers on the same day. If you are currently reporting both commuter bus and bus service, and you believe you may only need to report one of those modes, just contact your analyst for assistance. We can help you determine how it should be reported and provide steps on how to change it in the reporting system if appropriate. It's not going to be that much of not that much of a workaround here. It's not even a workaround, it's a quick update. Okay. The next topic that I'm going to cover is type of service. So currently in the NTD, there are two main types of service, which is directly operated and purchased transportation. And directly operated is when the service is operated by the agency and uses the agency's employees. And then purchased transportation is when the vehicles are operated by the seller's employees, the service is branded as the buyer's, and the buyer is paying the full cost of the service. Very important right there, full cost of the service. But within that purchased transportation side, there is TX, which is taxi for services operated by a taxi provider, and then TN for services reported by a transportation network company, or TNC. If the service is operated by the contractor that is neither a taxi provider nor a TNC, the type of service would remain purchased transportation, or PT. So when purchased transportation, we're talking about there's three within it, but purchased transportation, we see the most of those three types. That was an update made last year, so we're still kind of rolling that one out slowly. So after the mode and type of service is determined, the next question usually is, what data am I collecting for these services? Here are some of the data points, as well as abbreviations that are used throughout this presentation and on the report and in my common language. These data points are collected on a per mode and type of service basis, except for the sponsored unlinked passenger trips, which are only collected by the demand response mode types. These are common acronyms that you will see through all the materials that you'll ever run through in NTD. So VRM, VRH, BOMS, UPT, SUPT. I usually say sponsored UPT, just depends on what shorthand I'm using. All right. So we're going to first cover vehicle revenue miles, or VRM, and vehicle revenue hours, or VRH. We'll talk a lot about revenue service. So what does it mean? A lot of this is, what does all this mean? Revenue service is when the vehicles are transporting passengers or are able to transport passengers. This includes layover and recovery time. Revenue service does not include deadhead, driver training, school bus or charter services, and vehicle maintenance. When I'm talking about vehicle maintenance is if the maintenance provider needs to run it out for a couple miles to make sure, the timing belt's correct. Whatever that is, so that's not included too. Okay, so deadhead. Deadhead is not reported. Again, this includes leaving or returning to the garage or yard facility, changing routes, or when there is no expectation of carrying passengers. Really, all those three could be no expectation of carrying passengers, but it's just, if you think about it, if you're not carrying a passenger and you're not meant to be carrying a passenger, then it's not included. There are some detailed tables found within the policy manual which further provide examples of what is and is not considered revenue service, and I'm going to review just a couple quick of these next. This is the example of the demand response mode and of what it is not considered revenue service. Please note that the time and miles from when the vehicle is dispatched from the garage to pick up passengers are not considered revenue service until they reach the pickup point. Once they reach that pickup point, the clock's on. On the end of that example, the time and miles from the last drop off back to the dispatching point is also not considered revenue service. We've added this table to most of the presentations. I would definitely consider, passing this out to your subrecipients if you want to add more specific ones. That's fine. If you want to run it by your analyst, that's okay too. But these we've found have been a very good informational tool to make sure what is and what isn't revenue service. For bus, it's kind of the same deal. So bus travels from, dispatch point to the first stop on the route, deadhead, and then back home, deadhead again, unless there's the expectation of carrying passengers. All right, so revenue service, great. Unlimited passenger trips, or UPT, should represent the number of passenger boardings during that reporting period. So passengers will be counted each time they board the vehicle, no matter how many vehicles they use from their origin to their destination. When you are reporting unlinked passenger trips, please include all passengers. These passengers are usually classified as regular or sponsored. When reporting UPT on the RR20 form, this should be the total number of passenger trips, both regular and sponsored. And then for demand response mode, you will report the sponsored trips as a subset of the total. So the UPT report on the RR20 should always be equal to or more than the sponsored unlinked passenger trips. So sponsored unlinked passenger trips are those trips that are paid for in part or in full by a third party. These may be part of the Coordinated Human Services Transportation Plan, which common sponsors include the VA, Medicare, and assisted living centers. As mentioned in the last slide, and I will say this again, sponsored UPT should be reported as a subset of the total unlinked passenger trips for all demand response modes. We've had questions about this. The only reason why I've said it 3 times now. All right, VOMs. Vehicles operated in annual maximum service, or VOMs, are the number of revenue vehicles the agency operates to meet the annual maximum service requirement. What does that mean? That is a lot of words, I know. VOMs are counted during the peak season of the year on the busiest day, but you'll want to exclude the atypical days or special events. The count should include any volunteer vehicles that were used in that maximum service day, but it shouldn't be the amount of active vehicles your agency has in service on your A30, but rather how many vehicles are used at once. One point in the day, busiest day of the year, you have 10 vehicles, 8 of them are out at once with all drivers manned, 8. It's an example. Great. Another important definition for the NTD is accrual accounting. NTD reporting requirements for financial data follow generally accepted accounting principles, or GAAP, in accrual accounting. If there are conflicts between GAAP and NTD reporting instructions and requirements, the NTD rules are to be followed. In accrual accounting, the revenue is recorded when earned, regardless of when the payment is received, and the expenses are recorded when the liability occurs, regardless of when the payment is made. And you can see the example here and in the policy manual for more details on that. So we're just asking you to report everything that you spent or during that fiscal year, not necessarily what you will spend, but what you have down that you spent. Okay, Operating expenses. So with accrual accounting comes operating and capital. So operating are the day-to-day expenses that a transit agency incurs, such as operating and maintaining vehicles, maintaining equipment, planning costs, admin costs, as well as the examples seen here. So pretty much everything that's not capitalized. And then let's go over to capital. Look at that. Those are related to the purchase of equipment. Equipment means an article of non-expendable personal property having a useful life of more than 1 year. The equipment will have an acquisition cost which equals the lesser of the capitalization level established by the government unit for financial statement purposes, or $5,000 as determined by FTA. So if your agency is $2,000, then you can report anything $2,000 and up. That's basically what that's saying. If you don't have anything, then anything $5,000 and up for FTA purposes is what they're looking for. Great. So we have operating and we have capital, and then we have capital assistance spent on operations. This is when capital funding is spent on activities that are normally considered, capital funding is spent on activities that are normally considered operating, such as preventative maintenance and the purchase of tires. Please make sure to break this out from your other operating funding, as this has different match percentages. There's a separate field for this on the RR20 form for specific funding sources, such as 5311, 5310, 5307, off the top of my head. Especially 5311 and 5310 is very, sorry, I will slow down. I just get a little excited when I start talking about funding. So basically, preventive maintenance, purchase the tires, split it out, please. All right. So for operating expenses, if your agency has more than 2 modes, the operating costs will be broken out between the modes based on direct and shared expenses. Once the direct expenses for each mode are identified and broken out, the remaining shared expenses may be calculated between the modes based on cost allocation method. Please note that this is only acceptable for shared expenses. There should be some expenses that are direct to each mode. So when we're looking at this, it shouldn't be 20, 80, etc. All right. So when reporting your data to NTD, you'll report the funding you spent, not the amount your agency was awarded. Here on the slide is an example. If your agency was awarded $275,000, but you only spent $178,000, you would report the $178 in this example instead of the $275 that was reported. All right, here is a quick overview of the TAM rule. Those that receive Chapter 53 funds that own, operate, or manage capital assets used in the provision of public transportation services are required to report data for their assets. For recipients of 5310B1D, if they do not provide public transit services, they are not required to report under the TAM rule. With regards to how the data is reported, for those in the sponsored state DOT plan, you will report the assets associated with the plan on the individual subrecipients package. However, the targets and narrative report will come from the state DOT. All right, here's the TAM phase-in schedule. And as you can see, we're going into RY 2021, which means that 100% of the applicable condition assessments should be reported, and your narrative report must be submitted with this year's report, which will be submitted on the A90 form. All right, so your state may have Tier 2 participants as part of your plan, and these will mostly consist of 5311, 5310, and small urban providers. You report data on behalf of your managed participants, such as 5311 and 5310 asset-only providers, while the urban direct reporters will submit their own asset data on the report, on their report specifically. This data will be pulled into the metrics on your A90, and you as the state DOT will be able to view their asset forms, but not edit them. So again, that would be for direct urban or travel reporters that happen to be in your plan. You can view them, but you are not able to edit them. So for any edits, you would have to reach out directly to have them edit it. Data submission will work as always, with the state submitting one report on behalf of all managed subrecipients and participants. We will be mentioning capital responsibility multiple times throughout this presentation in a little bit, especially Eric. With regards to the expanded asset module, please see the list here to determine whether or not an agency has direct capital responsibility for an asset. As a note for the third bullet, an infrastructure asset itemized as a capital line item in the budget does not necessarily mean an agency has direct capital responsibility. An agency must also have management or oversight responsibilities for the line item project. In addition, performing minimal preventative maintenance work doesn't necessarily indicate a direct capital responsibility. We have gotten that question many times, and it's completely okay if you ask it again because circumstances are different. All right, as I mentioned in the phase-in schedule, the narrative report is due every year for each agency that is submitting a plan. This would either be states that are in a group plan sponsor, or I'm sorry, states that are a group plan sponsor, or individual agencies that completed their own TAM plan. The report may include any changes in the transit system that may affect progress towards their targets and how they determine the targets. This report will be uploaded to the A90 form. And I believe the TAM office has a template. It's on a new website page from last year, but they still do have a template for this. If you need it, we can send you the link. All right, next we will review the NTD interface and account user management. The NTD homepage is still found here. This is where the data products, policy manuals, and a clickable link to go to the reporting system, among other items, are housed. After logging in, all users will land on this homepage unless you've already starred either NTD, Trans, or Faces. Here, in this case, for this presentation, you will select NTD in order to access your report. If you would like to automatically go into the NTD site every time you log in, again, you can click that star at the top right of the NTD box, and that will save your preference. Okay, the NTD homepage will allow users now to directly access the NTD report from the front page. This is an update that was made last year. I think it's great. Next is the Tasks tab. This section houses your important tasks, such as report year kickoff, incomplete forms, or incomplete submissions. So sometimes when you're in the middle of submitting the report or doing the kickoff, the task will land here. However, it won't say kickoff task. It will just say whatever the last step that you were on before you exit out of it. So you might need to click around a little bit or look at when it was received to figure out which task that you're working on. All right, to access your report packages, you will want to ensure that you are on the home page. From here, you can select the annual tab and it will populate any open NTD reports for your agency. You'll see the state DOT package as well as the individual subrecipient packages. You can access the forms one of two ways. You can either click on the NTD ID with the folder icon on the left, which will direct you to the report package summary page. This is how you can access the list of your subrecipient reports as you have in the past. This route will also allow you to access related actions for the package. If you would like to just edit the forms, you can click on the pencil icon on the right-hand side of the page, and the system will take you directly to the clickable list of forms to edit. To access the reporter profiles, you'll want to ensure that you are on the home page or tab. Instead of clicking on annual, you'll select profile, and a list of your agency profiles will load. The profile is where you will want to edit your mode, your agency's basic information, as well as view other users from your agency. These forms usually do not change year to year, so that's why it's in a completely different area. To view the individual forms, you'll click on the pencil icon on the right-hand side of the page, which will allow you to access the P10, P20, P30, etc. To access all the other profile options as well as the summary page, you're going to click on the NTD ID folder on the left. So it's going to be a lot like that annual tab, same idea. Okay, so once you do click on the folder, for example, on the left, this is the profile summary page, as the same as previous years. Here you can go through the related actions to edit the P forms instead of the pencil. All right, next is the e-file library on the top. This is where you can filter through communication from prior years as well as this report year. And this is where you can also review your closeout letters, for example. The form library is where you can see data from previous years that has been submitted to the NTD. You will use the drop-down to select the package and then the link in blue for whichever form you want. These will be downloaded in HTML format. This is where you can also look at individual revisions or the closeout. So if you do want to see the last version, make sure you're clicking on the closeout of that year that you were searching. So in addition to viewing the forms through the form library, under the related actions tab of the profile, you will be able to print the previous year's report packages in full rather than form by form. Other actions you can do is view and editing the profile forms such as the P10 or basic information form, the P20 form, or modes, and you can view your users. Usually if you're updating your users, you're going to want to go through that user management upper right-hand area. And then of course here you can go ahead and print the entire package at once. So if you do choose to print your entire package, you'll be taken to this page where you'll click on the refresh button until the link comes up and you can download the file. So the file is kind of hides on you, so I want to make sure we pointed it out here. This is where it will show up once it's refreshed. It kind of gets lost within all the blue links. All right, so lastly, I wanted to go ahead and cover some of the user management and users. So to access the system, you of course need to first be a user. To add the users, each agency must have at least one user manager. That user manager may edit and add other users, as well as fill the NTD roles such as CEO, NTD contact, etc. So you're not just the UM, you can be a UM plus. Right. The most important users to have on your account will be the CEO and NTD contact. The CEO will be the director or the CEO of the agency and will be the one submitting the original submission of the report. And the NTD contact will be the main point of contact for the analyst to reach out to. Again, I'm talking to you as the state. This is who we would contact. After the first submission, the NTD contact may submit any subsequent revisions to the report that you may need. Agencies may have an unlimited number of editors and viewers, but there can only be one CEO and one NTD contact. I didn't talk about CEO delegate. CEO delegate is basically the same thing as a CEO, but the CEO is required to have on it. So if you only have one person, just have it as a CEO. But they'll have the same rights as the CEO, or delegate would have the same rights as the CEO proper. If you're already a user in the system and you need to unlock your account because you haven't logged in a while, there are two different ways to complete this. You can either unlock your own account if you have set up security questions, which we'll go over in the next slide, or you can submit an unlock request. If you submit an unlock request, the request will go to the user managers on the profile or one. If you are a user manager, it will either go to the other user manager or to the NTD team for processing. It is really important to note that even if you are locked out, you can still log into the NTD system. However, the reports will not be available to you until you are unlocked. So you still be able to log in, your stuff's just gonna be missing, and you're gonna contact us saying what's going on. So just try to unlock your account, and if you still have questions, just let us know. As I mentioned in the previous slide, if you have set up your security questions beforehand, you can just automatically unlock yourself. To set up these questions, you're going to go to the top right-hand corner of your screen after logging in and select your profile, then related actions, and then manage security questions. From there, you'll be able to follow the steps to set them up. It's basically just asked you, what questions do you want? Fill in your answers. You're good to go. Brought up self-reporting subrecipients really briefly earlier, but I want to go ahead and go over what it means for you as well as the subrecipients. If you do grant access to your subrecipients to be self-reporting, they will have the ability to edit and save their data as well as respond to validation for their own agency. Self-reporting is completely optional, and when this access is granted to the subrecipient, they would continue to reach out to the state DOT for technical assistance. And if the state has additional questions, they will then reach out to their assigned analyst on the NTD team. If you choose for your subrecipients to be self-reporting, you'll need to ensure that you create user accounts for them in the system to access it. All user managers for self-reporting subrecipients are handled by the state DOT user managers. Please keep in mind that all correspondences should go through the state before the analyst, so that way everyone is on the same page and we're not completing duplicative work. If you do want to have any of your subrecipients be self-reporting, just make sure you have your analyst in the know, because we have to add you as a user manager to those subrecipients. Whew, okay, so now we're going to jump into the report itself. So you're going to stop hearing from me in a couple and hear from Eric, but I'm going to get you through the kickoff. Let's see here. The report year kickoff is there for states to set up the reporting packages for the year that they are reporting in, as in report year 2021. To start with, the CEO delegate, and the NTD contact will have access to this task after the state's fiscal year has ended. That user will select the task from the task menu, then accept and proceed. This hasn't changed year to year, so if you've already seen this, it's the same thing. The next step is to verify the DOT users. You can go ahead and review this information and then ask your user manager to update what is necessary after the kickoff is completed, as only the UM has the privileges to add, remove users on the account after. So just, if everything looks okay and you're like, I need a note that I need to remove so-and-so, just go ahead and note it. You can come back to it. You don't have to do it here. All right, so after clicking continue on the previous page, you'll identify the subrecipients. You'll be able to review the list from your 2020 report and either add or remove subrecipients based on that. You will want to verify this list. If you make a mistake, never fear, you can add or remove after the kickoff too. All right, so for adding subrecipients through the kickoff, if there are previous reporters or urban/tribal reporters, you can search for them and add them to the grid of subrecipients. If you search for them, you'll need to click on the search button to get it to launch the search. You can't press enter. I've tried doing that way too many times. Please keep in mind that the search is automatically contained within your state. However, if they do have an address outside the state, for example, Greyhound in Texas, then you'll need to open up the state parameters from the drop-down menu to all states. Or if you know the state, select it. If you're adding a brand new reporter, you'll input their information at the bottom of the page, as you see there, add new subrecipients. You'll need to enter the reporter name and state, if nothing else. If you want to, you can go ahead and add that DUNS number I talked about earlier, so the address will pre-populate. If you do not have the information when you kick off, and you add and remove subrecipients again after kickoff through the state's package under related actions. Okay, so after adding or removing any subrecipients, you'll assign the subrecipient type. The type for existing subrecipients is preloaded with the information from the prior year. If you do have any of those new subrecipients, like brand new ones, you'll need to select what type they are from the drop-down menu. These types are rural general public transit service, asset only, urban/tribal, or intercity bus, which we'll get into what every one of those mean with Eric. Next, you will review which of the subrecipients are participants in the state TAM plan. Urban/tribal subrecipients are not selectable from the state's package for the TAM plan, as they will select the state, if applicable, during their own kickoff. And intercity bus subrecipient types are not part of the TAM program. The state will be able to choose whether or not rural general public types are in the TAM plan, as some may have their own or under other group plans. And the asset-only subrecipients will automatically be chosen as participants because you wouldn't be reporting on them otherwise. All right. After that, you'll click on continue, and then you'll be able to select which of your subrecipients will self-report their own data. This can be all, some, or none of your subrecipients. These designations do not carry over year to year and will be left blank, as in not self-reporting, if you continue without doing any edits. All right, the last step is clicking continue, then OK. After you click OK, you'll be notified that the report year kickoff is being completed and your forms are generating. This could take some time as packages are populating one by one, so please be patient. And sometimes if it's really busy, it might have to go most of the day in these bigger states. For any new subrecipients created during this process, it will produce a task for the analyst to review and will not show up in your package immediately. Your analyst will probably reach out to you upon receiving that task for more information if you haven't already talked about it beforehand. So just have the website and additional information about funding or assets available. After you kick off and it's complete and your forms are generated, it's time to get into the package to fill out the data. With that being said, I'm going to go ahead and hand it over to Eric to walk you through the NTD package forms. Thank you for listening to me.
Thanks, Bailey. As mentioned, we're now going to be going over how to complete the 2021 annual report. The main type of subrecipient that we have is the RGPT, the Rural General Public Transit subrecipient. And this type is for an agency that provides rural service and benefits from 5311 funding or is reporting through the useful life of a 5311 funded asset. And here are the required forms that you're going to complete that we'll be going through here momentarily. The next type is the asset only sub. This reporter type benefits from funding that is not 5311 or 5307 and owns, manages, or operates assets funded by FTA that are used in public transit. An example of this would be a 5310 provider that operates public transit. And these reporters will have a smaller package of forms that include the standard B10 identification form, along with the 3 asset forms listed here. The next type is the intercity bus subrecipient. These are the providers that schedule bus service to the general public that operate with limited stops between 2 urbanized areas, connect a rural area to an urbanized area, or has the capacity to transport luggage. They too have an abbreviated report that includes the B10 information and the abbreviated RR20 form that includes the 5311 fund expended, the vehicle revenue miles, and the unlinked passenger trips. In reporting the VRM and UPT numbers, note that this should be when providing 5311 services. So if a route is only partially funded by a 5311 program, all the miles and ridership should be reported for that route. And then lastly, we have the urban or tribal subrecipient. These are either an urban reporter that provides urban service or uses 5307 that already directly reports to NTD, or an Indian tribe that performs rural service who also directly reports to NTD. So since these agencies already directly report, the state will just submit an abbreviated report that includes their B10 information in the amount of 5311. So the first step in working on the report is getting to the package by going to the homepage as seen here, and then selecting your state package for the 2021 report year. So once you have access to your state package, you can then work on the state-specific forms listed here, or select a subrecipient to then work on. So to work on a specific subrecipient report, you want to select the subrecipient reports tab to view them all. And when you're on this screen in the grid, you can also click any of the headings to kind of sort whichever way you'd like to. From the subrecipient package screen, you'll then select annual forms in the top right to get into the forms to insert or edit the data. And then once you click annual forms in the top right, this will be the page that you're brought to, where you're then able to select each form to edit. So the first form we're going to be discussing is the basic information B10 form. You'll be able to edit the data from the summary page by using the drop-down menu to select the organization type and inserting the fiscal year end date. As a note, the organization type will be pre-populated from what was reported in the prior year, and the fiscal year end date will show the year that the data is being reported on. In addition, the bottom part of the form, there's an additional section where you can select scenarios that may apply to your agency that deal with assets or data being reported by another agency. So if you have any questions about these, or if this applies to your agency, you'll just want to reach out to your assigned analyst just to loop them in and then have them understand your scenario. And then the next form we're going to go through is the A10 stations and maintenance facilities. So the A10 captures the type and number of maintenance facilities used for public transit and are reported based on the capacity and ownership types of those maintenance facilities. So the definition of a maintenance facility is a garage or building where mechanics perform routine maintenance and repairs, along with typically serving as an operating garage. So with that being said, that does not include bus barns in the count here in the A10 form, or any sort of third-party facility where you would take your vehicle to get worked on. If one facility is shared by 2 or more modes, you'll want to report a prorated share based on the number of vehicles it services. So for example, an agency owns one facility and operates a demand response in a fixed route bus mode. Both modes share the facility, and there are 20 vehicles in total. With this, the demand response mode running 15 vehicles and the bus mode running 5 vehicles, we would expect to see 0.75 reported for demand response and 0.25 for the bus form. So when doing this and there's more than one mode, just make sure that the total number of facilities between all A10 forms equals a whole number. And we're going to move right along to the A15 asset inventory facilities inventory form. So the A15 form collects basic information on the facilities that are used to supply public transit service. So on this form, you report administrative and maintenance facilities for which you have capital responsibility for. In addition, you will report passenger and parking facilities regardless of the capital responsibility for those facilities. So if an agency has an owned facility on the A10 form that we previously just went over, we would typically expect them to have a facility entered on this form here. And if not, then we'll just reach out for an explanation for why that is. So into the A15, to actually add the facility, you'll click the Add New button and then the Add Facility hyperlink there. And this will allow you to enter data into 3 sections for facilities information, condition assessment, and the address. So once all 3 of these sections are filled out and all boxes are filled out for the sections, you'll just click Continue, and then you'll be able to save and validate afterwards. So moving along on the forms here, we have the A30 revenue vehicle inventory form. If you completed this form last year, the 2020 data will pre-populate, and you will only need to report new fleets or edit existing fleets. And you can do that by clicking the Add Fleet button, or if you're editing an existing fleet, you can click the Fleet ID number, which will bring up additional information. In addition, you may export the data using the export data function on the bottom right here, and you'll retrieve an Excel sheet of the vehicles in the A30 form. And you may think it's easier to update this form and then import it back in rather than doing it manually. So you're able to do that as well. So when adding a new fleet, you'll fill out all required information as shown here on the page. One important point to note is the no capital replacement responsibility field. This field is only going to be checked if you do not have capital replacement responsibility for the vehicle. So checking off this box will remove the requirement for reporting a useful life benchmark on this fleet. A common question received is the difference between an active and inactive vehicle. The transit agencies are reporting the number of active vehicles in the fleet at the end of their fiscal year. So active vehicles provide regular service, and they also include spare vehicles, while inactive vehicles are awaiting sale or disposal, in storage, or part of an FTA-approved emergency contingency plan, or out for major repairs. So following on the previous slide about the vehicles, just please remember to retire the fleets that are no longer in service rather than deleting them entirely from the inventory. So to retire a fleet, when the fleet's retired, you'll update the active vehicles to 0. You'll keep total vehicles the same. But once you update the active vehicles to 0, the question is this fleet retired will prompt up on the fleet details as you see here, and you will select yes. And the next form we're going to discuss is the service vehicle inventory form, which is the collection of service vehicles used to indirectly provide transit service. So agencies are required to report on fleets which they have capital responsibility. And these service vehicles include admin staff cars, transit police cars, tow trucks, but should not report small forklifts or golf carts or non-roadworthy vehicles. So just as a note, this is where we report vehicles that indirectly deliver transit service. So any vehicles that perform actual service that transport passengers will be reported to the 830 form, and then any that indirectly deliver service will be reported here. So once you select Add Fleet, you will fill out all the appropriate information required for the service vehicle. Note that estimated cost is the full cost to replace the fleet, and the year dollars of estimated cost is a corresponding year to that estimated cost you're reporting. So if your agency has more than one vehicle or more than one mode that they report, and there is a vehicle, the primary mode will be the mode that the vehicle services the most, which can be at your agency's discretion. So now we're moving on to the last form here, which is the RR20 form. So when you open up this RR20 form, the total fund expended is at the top of the page, which is the non-editable running total of the funding that's entered on the form below. And the two numbers should match the total fund expended by mode and type of service as circled here. But your agency may have situations much like meal delivery service that Bailey touched on earlier. So if that's the case, we'll ask about invalidation, and you'll just want to give us that specific scenario for why they may not match. So agencies with more than one mode are required to capture and report expenses by the specific mode and type of service rather than allocating the total amount of operating expense. So to separate these funds, if you have more than one mode, you'll want to determine which expenses are direct and can be easily traced to one of the modes that you're reporting, and then identify what expenses are shared between the multiple modes that you're reporting. And for the shared expenses that you have, you're able to then allocate on a factor like vehicle revenue miles, how many passenger trips, hours, employees, or whatever factor your agency would like to allocate those shared expenses for. The next section of the R20 is where we report fare revenues. So these fare revenues include all income received and expended directly from passengers, and this includes donations made on the vehicle. So when reporting fare revenues, they're broken down further between passenger paid fares and organization paid fares. And the passenger paid fares are those that have been traditionally considered a passenger fare, where the rider pays when they board the vehicle. And then organization paid fares or when organizations pay or they pay through a third party. So in addition to having that scenario, Medicaid funds from non-emergency medical transit trips will be reported in this field. Moving forward, if you have more than one mode, you're also required to separately capture and report the fares by mode and not allocate the total. So if your agency is an exception to the two scenarios listed here, you'll just want to discuss this with your analyst to make sure they're aware of your situation and you have everything reported correctly. Next is the other directly generated funds field. Here are some examples of funding sources that you place here. Just as a note, when you place the dollar amount into this form or into this line item, you'll need to describe the funding that you place in there right below. Next are revenues accrued through a PT agreement, which will be reported if you receive revenues from another agency that pays for the full cost of a service you provide, as long as that meets the NTD definition of purchase transportation. So if this is reported on, it's likely your ANS will just want to discuss this situation with you further, again, just to make sure that the funds are reported correctly. So going in order of the form still is the non-federal funding section. Here you're going to enter data based on if it came from local funds, state funds, or other non-federal sources. Note that the state funds do not include the Chapter 53 funds that a state may pass through to a subrecipient. And if you do report other funds, when you put in that dollar amount, you'll have to place a description of those funds being reported below. The next section is the federal funding source section. So here you're going to see the list of all the federal programs we have. You can select the subfields by the plus button beside the federal funding source. And if you have any of the last three for other FTA funds received from other USDOT grant programs or other federal funds, you'll just need a comment when you place that in there, much like other funds and other directly generated funds. Examples of the other FTA funds will include FTA funding sources that were not listed on the form previously. Other federal funds would include sources from a federal grant that's not FTA or USDOT, and other USDOT funds will include funds from the Federal Highway Administration. So after the financial sections, you'll then enter all the necessary resource information. So if you don't have any applicable data to report, you'll just want to make sure that this is filled in with a 0 rather than left blank. So for the service data, the miles and hours reported should only include revenue service, like Bailey mentioned earlier, which includes transporting passengers or being able to transport passengers. And then when reporting only passenger trips, these are passengers should be counted each time they board the vehicles, no matter how many vehicles they use from their origin to destination, and that the total UPT should equal the regular UPT plus sponsored service UPT. So after the service section, the safety data is the last section of the R20. This is where we report any sort of reportable incidents, fatalities, or injuries. Reportable incidents will include fatalities, injuries, or property damage that exceeds $25,000, collisions involving revenue vehicles that require towing away from the scene for any vehicle involved, or an evacuation for life safety reasons. Fatalities are reported when the death occurs within 30 days of the incident, and then injuries are reported when passengers are immediately transported away from the scene for medical attention. And once again, if there's any questions about if one of these is reportable, feel free to contact your analyst and you can work through this scenario with them. That takes care of the subrecipient forms, but the state does have a few forms that they need to fill out on their own, and one of which is the RU30 form. So the RU30 form requires 2 data points to be filled in, shown by the red boxes here. This is the 5311 expended on state admin and the number of counties with 5311 service. As you note that the number of counties statewide does not have a red box, as this is automatically populated. So for these 2 boxes in the RU30 form, the first one being the statewide or the 5311 expended on state admin. This is the amount of 5311 funding that's the state spent on administering the program. And the number of counties with 5311 service is the total number of counties served in whole or in part by a 5311 operator. And this includes counties served by tribes in that total county count. Then the second form that the state reports is the A90 for the performance measure targets. So you'll fill this out if you're a group plan sponsor. And if your state DOT is not a sponsor, you'll just select NA for each section. And we'll show that here shortly. But going with the A90, this is where we report the targets for the portion of the assets that have met or exceeded their useful life benchmark. And this will also compare current year targets to the live data pulled from the asset forms shown in the performance column. So here's the first section dealing with the rolling stock or the vehicles from the A30 form. So as mentioned, NA should be selected in the case where there are no vehicles reported of that type, while a target should be reported for those vehicle types that you have a performance for. The second section is for the equipment, which is in regards to the 835 form for the 3 vehicle types of automobile, truck and other rubber tire vehicles, and steel wheel vehicles. And then the third section contains the equipment targets for the A15 form. And this is where we report the target for the number of facilities that rate below a 3 on the scale. And at the very bottom is where we upload the narrative report that should outline the performance targets that your agency reported and any sort of progress towards those targets. So once we've completed all the forms for the report for the subrecipient in the state, we just need to then submit the report in the system. So the way to do this is by clicking the Related Actions tab from the state report package summary page. And to note and bounce off what Bailey mentioned earlier, only the CEO and CEO delegate can submit the original submission of the report. And then the CEO, CEO delegate, and the NTD contact can submit any subsequent submission. And when you're in related actions, the second option down should be submit the annual report package. So when you go to submit, if there are any open issues, non-saved forms, or just missing data points, you won't be able to submit the report. So in that case, you'll want to go to the subrecipient package and complete, whatever issue that is, and get that squared away before resubmitting. So when you do that and have all the issues filled out, no issues remaining, and you click submit, you should see a box here after continuing and submitting, seeing a box that says ask completed successfully. If you, for some reason, missed that, you can always confirm that the package was submitted successfully by going back to the state package page, and you'll see that the report should be in review. So not lastly, but kind of rounding out the ends, we're going to go through some of the common reporting challenges faced during the report year. So some of the main challenges faced in the report year include understanding the NTD policies, completing data entry correctly, completing the entire report, and going through the validation issues that your analyst may bring up during the year. So the main challenge typically stems from the validation that the analyst will send the report back for, and will occur when analysts have questions about the data that was submitted. So with that, agencies can either revise the data to reflect the correct and accurate information, or they can provide a sufficient explanation to further clarify the response. As mentioned earlier, another issue deals with the allocation of operating expenses. Just as a note, they should be reported by the mode and type of service rather than allocating them out in total. The only expenses that should be allocated are the shared expenses that cannot be tied to a specific mode. Another one here is in regards to the year-to-year funding changes and making sure that the funding sources used for public transit are reported to the correct lines on the RR20. So as we mentioned earlier as well, there are additional funding sources listed for the pandemic relief funding, and you're able to place those in the appropriate line item. And then kind of just touching on revenue service, once again, agencies should only report service data for when they're performing revenue service, which again includes deadhead. And deadhead is when transit vehicles are operating closed door and do not carry passengers. So including any sort of leaving or returning to the garage, to or from the starting or ending point, changing routes, or when there's just no duty to carry a passenger. So just reiterate, no deadhead, report the revenue service that the agency performed. Going forward is the volumes or vehicles operated in annual maximum service, which is the number of revenue vehicles the agency operates to meet the annual maximum service requirement, which do include volunteer vehicles, but excludes any sort of atypical days or one-time events. This is not the total amount of vehicles, as Bailey mentioned. It's not an average. It's the max vehicles that are used to provide service simultaneously once during the year. Next is reporting capital expenses for new vehicles. So it's pretty typical that when an agency reports a vehicle, they'll report the corresponding capital expense on the RR20 form. So these capital expenses are related to buying an asset or improving a capital asset, and should include the acquisition cost, the cost of delivery, the installation cost, and any sort of modification cost. Here, all agencies must report the inventory of the vehicles they use to provide public transit on the 830 form that have not been sold or disposed of at the end of the fiscal year. So these vehicles must be reported in the fiscal year when they become available for service, and the inventory should be essentially a snapshot of the last day of the fiscal year. Moving along is when completing the A90 form and updating the targets on that form. You'll want to report the next fiscal year performance targets for the assets you have capital responsibility for. So if you don't, the report won't be complete until you have a target for that asset you have performance for. And a couple common mistakes include reporting the incorrect target. Maybe you have 2 targets flip-flops, reporting an unrealistic target percentage, or just omitting the target on the form in general. As a reminder, state DOTs submit data on the public transit operations of their subrecipients who they award federal program funds to, and cannot fully submit the report until all subrecipients have the report completed. And that includes all 4 of the subrecipient types listed here. So once we submit the report, there are just a few steps that need to be taken to completely close out the report for the year. So your assigned NTD analyst will review the entire report for accuracy and consistency once it's been submitted. And they'll compare the data that was submitted this year to the data submitted last year for any significant changes, as well as ensure that all data was reported to the correct field. So if there is a validation question on a year-to-year change requiring explanation, please try to avoid stating a generalized response that doesn't provide enough context. And then during this process, we're more so seeking a thorough explanation for the change, which will reduce the amount of back and forth between yourself and the analyst. So once the analyst has gone through the report, they'll send it back to the state to resolve any open issues. And each time this happens, the due date timetable is shortened, as presumably there will be fewer and fewer issues each time. Please note that if there is any failure to correct the issues stated in the prior year closeout letter, they may be marked as questionable in the current validation year. You'll just want to discuss that with your analyst if that does arise. So bouncing off the closeout letter, notes in this closeout letter will typically relate to incomplete reports, which could mean the data doesn't conform to NTD definitions, accounting principles, or it can mean that the agency didn't adequately respond to validation issues. So all identified issues will need to be fully addressed in order for them to be resolved, and any unresolved issues will be cited in that closeout letter. So when we have these issues, the best way to resolve them, as I mentioned previously, is to provide a detailed explanation that gives your analyst a clear picture of the service. So this could be explaining why the data changed year to year, or what service changes took place to cause significant shift in the data. And would be more than just saying that the data increased or decreased. It would be describing the changes or impacts during the year that caused the service to increase or decrease. So one thing that does occur is that the agency will discover the reason for a change may be due to the prior year data being incorrect. If this is the case, please provide an explanation as to why it was wrong, what it should have been, and why this year's data is correct. And you'll just be able to work with your analyst about those 3 items for incorrect data. So made it to the end here. Again, here's the contact information for everybody and the help desk. Thank you guys for listening to this long presentation, and then we'll be able to address any questions that come up here.
So since we have a few minutes, if anyone has any additional questions, please feel free to type it in the Q&A box, and we will wait and see if any new ones come in before wrapping up. There's a question in. It says, do we know what date the forms will open on this year?
That's a good question. It has not been formally announced yet, which should be within the first 2 weeks of September. We're just kind of getting a couple last minute items for development. But as soon as it does, you will be reached out from your analyst immediately, saying that they're live, as well as giving you those welcome materials.
Great. The next question is, can we clarify when we would check the box for no capital responsibility?
Okay, so the only time you'll check the box for no capital responsibility is just that if the subrecipient does not have any capital responsibility for the vehicle itself, period, full stop. It's not something you should change necessarily. It would be if, you know, they're leasing the vehicle, for example, and they're always leasing it. In that case, it could change if they like had a lease to buy and they ended up owning the vehicle and it was in their name. So capital responsibility, no capital responsibility box should not be checked unless there is that type of change.
Great, thank you. Anyone else? We'll just wait another minute. All right, well, dead air is uncomfortable. So if you did have any lingering questions, don't, get it typed in time. The screen that's up right now is available in the handouts, which I did paste in the chat box, and you should have received in an email. You feel free to email anyone with your questions or call or email the help desk. That being said, thank you so much, everyone, for participating in today's webinar. Bailey and Eric, we really appreciate your information. It was great, very thorough. And I'd like to remind everyone that you will be receiving an invitation for an evaluation for this webinar. Please just take a couple of minutes and fill that out for us. We really appreciate your feedback. I don't have anything else. So Eric, Bailey, do you have any parting words? Otherwise, we'll wrap this up.
Well, thanks everyone for attending.
Thanks everyone. We'll probably talk to you soon and hear from you soon.
Take care. Be well, everyone.